Me, and today we are looking at part 4 of our tutorial series, fundamental analysis. That's what we want to talk about today, guys. So the outline for today: what is the meaning of fundamental analysis? We're going to talk about how to evaluate a cryptocurrency, what can make price go up or down. We'll talk about some examples of how FA, or fundamental analysis, has actually influenced price. We'll talk about how to use CoinMarketCap and Blocktivity.info. Talk about some common trading tips and quotes. All right. So let's get right onto it. Markets are unpredictable. This is a fact. There's no way to accurately figure out how, when, or why the market will move. All right. But with sound analysis, you can have a reasonably good idea. You can make a very educated guess. All right. And you can actually, be able to know where the market is going. Fundamental analysis is one method of actually analyzing the market. It's a method of evaluating the intrinsic value of an asset and analyzing the factors that could influence its price in the future. Right? So you want to know, why is Bitcoin over $10,000 right now? What is the value in Bitcoin? And then you also want to know, is it going to go up or down? And what is going to make it go up or down? That's fundamental analysis. Now, how do you evaluate a crypto? Fundamental analysis is one way, as we've said just now, but it's not the only way. So FA is not 100%. There are many things that can make a crypto price move. Sometimes it's even moved by market manipulators. All right. So strong fundamentals alone cannot give you 100%. You need to have this at the back of your mind. All right. So in evaluating a cryptocurrency, let's say you want to buy a cryptocurrency, you need to first ask yourself, is it listed on an exchange? Which exchange is it listed on? All right. Is there liquidity? If I want to sell my bag, will my order be filled? All right. Will there be so much slippage? Who are the people behind the project? Who else is investing in it? All right. It's very important. All right. The people behind the project is very important. You want to invest in projects that have reputable people with track record of success behind them, because it means that you're taking a lesser risk, because there's a better chance of the project succeeding. All right. So you want to look at, what's the utility of the token? Does it make sense what they're trying to solve, or is it just bullshit? You want to look at the white paper, right? You want to look at their plan. You want to look at the community support. Do they have developers, block producers? If it's a depot blockchain, do they have content? Do they have developer resources? How's their Twitter? What are people saying about them on Twitter? All right. Do they have funding? All right. How are they doing their marketing? Right. These are things you want to look at when you are evaluating a cryptocurrency. You also look at things like the price. All right. And this will take us to coinmarketcap.com. Coinmarketcap is a site that lists the major cryptocurrencies and some interesting stats about them. In fact, everything you want to learn about the cryptocurrency, you can learn on CoinMarketCap. All right. You can look at the price, look at the 24-hour movement. You can look at the market cap. You can look at the circulating supply. Now, one mistake I noticed that newbies make is that they look at two cryptocurrencies. For example, Bitcoin Cash, which is valued at $400, and Stellar, which is valued at $0.2, and say, oh, Stellar is so cheap. I'm going to buy a lot of Stellar because one day it's going to go up and get to $438. I heard it's a very good product. Why is it so cheap? All right. You need to understand that the reason Stellar is cheap, it doesn't mean that it is less valuable than Bitcoin Cash. It just means that there are a lot of factors that determine the price. If you look at the circulating supply of Stellar is 22 billion. And then what is the circulating supply of Bitcoin Cash? Bitcoin Cash is just 18 million Bitcoin Cash in existence. And you can see is almost, if you look at this bar, it's like Bitcoin Cash has really gotten to the end of it. You can see XLM has a long way to go. All right, let's look at XLM in detail. All right, so what you are learning from this is that XLM is looking cheaper because there's a lot of XLM. In short, it hasn't gotten the max supply is 50 billion, so it has just gotten to 44% of its supply. So this token is, in a way, it's prone to inflation. So those are things you want to look at. All right, so that's why it's cheap, because there's a lot of XLM in circulation, but compared to Bitcoin Cash, there's not so much Bitcoin Cash in circulation. So Bitcoin Cash in circulation is just 80 million, and so that's why although they have their market cap is not so different, or their market cap is not far away, but this one is priced at such a high dollar figure because there's only so little amount of Bitcoin Cash in circulation. It's a scarce coin, all right, compared to XLM, right? So don't go ahead saying XLM is very cheap, and this price does not give you everything you need to know. You need to look at the amount of XLM in circulation, and then you need to look at the market cap. In short, the market cap tells you more than the price does. The market cap tells you, if you look at the market cap of Bitcoin, for example, it tells you there's $611 billion invested in this project. There's so much money in it right now, compared to other cryptocurrencies. It has the highest market cap. So it tells you like the strength, all right, of that particular cryptocurrency, all right? Because if there's so much money, there's a lesser likelihood for failure, all right? So those are just some of the things you can learn from market cap. You can dive deeper. You can look at the statistics. You can look at the all-time high, the all-time low. All-time high for Bitcoin is $41,941. Got the all-time low in 8 years. You can look at all the historical data. You can look at historical data, social rating, Whitepaper, community explorers. This was good. There's a lot of things you can get from CoinMarketCap. All right. And then another site where you can get information about cryptocurrency is blocktivity.info. Blocktivity measures the number of transactions that a blockchain can perform per second. All right, and you can look at this to assess the strength of the blockchain. For example, EOS right now has the highest transaction record in blocktivity, so it tells you that it is the most scalable blockchain. All right, some of the problems that blockchains like Ethereum and BTC, they're having scalability issues. So those are some of the things you can look at to sort of evaluate the strength of a blockchain, and therefore its cryptocurrency. So let's move on. In evaluating a crypto, you can go deep. You can look at the block explorer, look at the number of accounts on the blockchain. You can look at the number of accounts that gets produced, that gets added to the blockchain daily. It gives you an idea of the growth rate, of a blockchain, and then you can relate that to the cryptocurrency. You can look at the number of transactions based on economic activity. You can do that on Blocktivity. You can look at the number of quality of dApps. All right, a website where you can do that is dApp Radar. All right, especially for blockchains that are involved in that are platforms for dApps. There are some blockchains that are platforms for decentralized applications. For example, Ethereum. I don't know much about Polkadot, but I know Cardano, EOS is there, and many others. All right, so you can look at dApp radar and see, okay, how many dApp is on Ethereum, how many dApp is on EOS. It gives you a feel of um, the level of involvement, the level of adoption of that particular blockchain, and hence it's cryptocurrency. You can look at the staking in deepest blockchain or proof of stake blockchains and cryptocurrencies. When a lot of people are staking in to that ecosystem, it means that they believe, all right, they want to have a stake in that cryptocurrency because they believe that it's going to succeed in the long run. But in a scenario where people are staking their cryptocurrencies, it gives you a red flag that something's wrong. A lot of people want to cash out, and you want to make sure that you're the first person to cash out. All right, and then the dollar value of transactions. We'll talk about more on that later. All right. So, what can make price go up? One of the things that can make price go up, in fundamental analysis, you're trying to figure out will price go up or will price go down. Hype, marketing, all right, especially in the cryptocurrency space. There's a lot of hype, there's a lot of falsehood, but all those things can influence price. All right, and generally you want to buy the rumor and sell the news, right? So if you can see that a particular hype is going, if you see a particular trend that is being hyped, you want to make sure that you get in, right? Because things can go scrap and then it can turn into a trend, and if you get in quickly, you can make a lot of money. Right, so demand from institutional buyers or retail traders. Now we've been seeing a lot of demand for Bitcoin from institutional guys, and that's one of the reasons why the price of Bitcoin has been going up. All right, we've just witnessed a parabolic move of Bitcoin. Has been really crazy. Bitcoin going from 20 all the way to $40,000. Really cool. All right, so another thing you can look at is partnerships. When blockchains, cryptocurrency projects start making partnerships, it's all going back to the hype and marketing stuff. It creates hype, and then people want to get in, people want to buy. Scarcity. All right, a lot of people predicted that after the Bitcoin halving, Bitcoin is going to go up, and they were right. All right, when the more scarce the commodity, the more the price will go up. All right, especially when there's an increased demand. Right, so when there's a token bond, for example, you reduce the amount of tokens in circulation, and then even if the demand is fixed, the price is going to go up. It's simple economics. All right, when investors have an incentive to hold coins or lock up coins, the price will go up because you lock up coins or tokens from circulation, and then of course same demand, the scarcity, the price goes up. Right, when there's a massive crash, all right, now as long as the project is a valid project that is not a scam coin or a shit coin, whenever there's a massive crash, really massive, what usually happens is a bounce back. All right, the price will retrace. Price will just there's going to be a trend reversal at some point. All right, so whenever there's a massive crash, you want to be looking for opportunities to buy the dip, guys. It works. All right, and when there's a new listing, especially for coins that have low market cap, coins that are just new, when there's a new listing because of access to new market and liquidity, price could go up. All right, so what would make a price go down? Make price of a cryptocurrency go down? Bad news. All right, bad news. FUD means fear, uncertainty, and doubt. When there's bad news, when people start saying bad things, maybe there's government regulation, maybe the CEO did something bad, or maybe there's a hack. All this can make the price go down. Yeah, founders leaving the platform, inflation. All right, When there's too much inflation, there's excess supply, not enough demand, price goes down. When there's an unlock of pre-sale tokens, initial investors may want to cash out and take some profit. And if there's not enough buy pressure, price goes down. When there's big price pumps, parabolic moves are not sustainable. They can only go up. After a while, expect a little bit of pullback. All right. Exit scam, of course, if the CEO of a project and executive, if they run away after collecting a lot of money, you will end up being a bag holder because the price is going to dump and never ever come back. All right. Regulation may affect the price of cryptocurrency if it's negative. For example, we've seen where privacy coins have been facing a lot of regulatory issues lately. They're being prohibited by some government agencies in some countries. And what happens? The price goes down because now people are not able to access those cryptocurrencies. People are panicking. They want to sell because they don't know what's going to happen next. So whenever there's negative government regulation, price is affected, right? And whenever there's a delisting, whenever an exchange delists a cryptocurrency, price is going to be affected. The cryptocurrency price must go down, right? Because people will sell because they're afraid that they will no longer be able to trade the cryptocurrency. All right, so we have highlighted some examples. I call this the Elon Musk effect. Now, those of you who are active on Twitter will know Elon Musk. All right, he's the richest man on earth right now, and whenever he makes a post about Bitcoin or Dogecoin, the price goes up. Right, the last time he made this meme, and he tweeted that Bitcoin is a safe word. What happened? The price of Bitcoin went up, and there was this time he said that he's Dogecoin CEO. He just posted some things about Dogecoin, and then price goes. So if you are observing and you notice some influencers start posting about particular cryptocurrency, influencers like Elon Musk, you want to try to buy in because it's been proven that price will react. All right, the market will react. The XRP example, boy oh boy, SEC has been doing a lot of regulation lately. Regulation in quotes. SEC charges Ripple and two executives with conducting 1.3 billion unregistered securities offering. Because of this news, Grayscale dumped their XRP and exchanges started delisting. And what happened? The price of XRP went down. It crashed really hard, and XRP has not recovered, but it's still there. It's still a big boy, still seated at number 5, but it's facing a lot of heat right now because of this SEC regulation. So what will happen if China, the US, or the UN ban Bitcoin? Definitely price will react. People will start to have FUD and they would sell, and then the price will go down. Simple, common sense, fundamental analysis. Now, let me give you some tips and some quotes, all right? I'm sure you're going to love this. See something new, figure out early why it's going to be a big deal, and then invest in it before it becomes obvious to everyone else. Now, this is how to make money as an investor. All right, you need to have foresight. All right, you need to be able to be willing to take risk. All right, if you're investing when everyone else is investing, when there's hype and it's all over the place and everybody's talking about it, it's probably too late. Right, you want to get in when nobody's talking about it, nobody's paying attention to it, the media, the news, they've not caught up to it. That's the best time to invest. Be greedy when others are afraid, and be afraid when others are greedy. Right? Because market moves in circles. Right? And Human psychology is such that when the price is going down, nobody wants to buy. They're afraid that it's going to keep going down. But that's the point where you want to be buying as an investor. Right? As a trader, okay, you can make money by following the trend. You short the market when it's going down, you make money. You long the market when it's going up, you make money. Right? But as an investor, generally, you want to you take advantage of those moments. Right? When everybody is either afraid because price is down, or excited because price is going up. When price is going up, you just want to. When price is already up, there's already a lot of hype. You just want to stand back. All right. So the trend is your friend until it stabs you in the back with a sharp stick. Now, remember, market moves in cycles. No market goes up forever, and no market goes down forever. There's always a trend reversal. All right. You want to trade what's happening and not what you think is going to happen. Right. This is very important for traders. Market is a device for transferring money from the impatient to the patient. All right. You keep seeing tweets and posts of people saying, I wish I bought Bitcoin 10 years ago. I wish I bought Bitcoin 4 years ago. I wish I bought Bitcoin last year. The truth is, if you bought Bitcoin last year, you would have sold it. You bought Bitcoin 10 years ago, you would have sold it because you wouldn't have had the discipline and patience to actually hold. And that's what you need as an investor. That's what you need as an investor. You need to have a lot of patience. Sometimes the simplest things to do, or they're not the easiest, right? Just simple, just buy and just leave it there. But most people would rather, they want to use it for a lot of things. And if you bought Bitcoin 10 years ago, you would have been hacked. You would have invested in some shit scam or something. You would have sold it when you thought you made 100% or whatever. So being patient is one skill that you need to have as an investor. And then finally, the final quote for today: anything can happen. All right. This is one thing that you need to have. You need to understand it. You need to meditate on this. All right. And you need to internalize it. It needs to become part of you. You need to understand that anything can happen. And when you understand that anything can happen, you tend to manage your risk. All right, crypto can go parabolic today, and every investor becomes rich. It can also go to zero. Remember oil. Remember what happened to oil, right? Anything can happen. I know a lot of people are going to hate me for saying this, and it's very unlikely for crypto to go to zero. I don't think it's going to go to zero. I don't think it's possible for it to go to zero. Do I? I believe that anything can happen, right? If I know that anything can happen, it means I should be prepared for any eventuality. Will I put all my money in a single trade or investment when I know that there is always a possibility that I could be wrong, that the investment can go south? No. Will I forgive myself whenever I make a wrong prediction? Yes. Because I know that there is no way to actually figure out how the market will move. I'm only making a guess. And all it takes for the market to move against me, despite my hard work, and level of research, it's just one tiny factor that I may not even know, or that may not even exist right now. All right, there could be a black swan, an event that is so crazy that nobody ever thought of. Right? Is it not better to just avoid predicting the markets altogether and just follow the trend? If you're a trader, this could be a better option for you. All right, ride the trend, trade the momentum. All right. So that will be all for today. Thank you very much for listening. A quick recap of what we said. We said fundamental analysis. We talked about the meaning. We talked about how to evaluate the cryptocurrency, what can make price go up or down. We talked about some examples of how FA affected the market. We talked about how to use CoinMarketCap and Blocktivity.info. And then I also gave you some trading tips and quotes. All right. So thank you very much for watching. If you enjoyed this video or not, I want to invite you to the EMI crypto community, the IM crypto community, call it whatever you want. It's a place where you can network with top traders, get quality technical and fundamental analysis for your trades, get access to premium signals. And if you want in, just follow the link below, bit.ly/EMI Trading Academy. Thank you very much for watching. Stay blessed. Bye bye.